Welcome back to We Can Do It Women. I'm Deborah Morrison, and today we're talking about something that makes some people a little uncomfortable: how politics directly affect your financial future. Now, I want to be clear from the start. This isn't about which party to vote for. I've worked with women across the political spectrum for over 4 decades, and my job is to help you protect and grow your wealth regardless of who's in office. But here's the reality. Political decisions directly impact your Social Security benefits, your Medicare coverage, your tax bill, your investment returns, and a whole lot more. So as women over 60, we can't afford to ignore how policy changes affect our financial security. But today I'm going to break down the key policy areas that impact your wallet, show you how to protect your wealth from political volatility, and give you the tools to stay informed without getting overwhelmed by the noise. And there's a lot of noise. So here's what I've learned. The women who thrive financially are those who plan for multiple scenarios and don't let political uncertainty paralyze their decision-making. How about Social Security and Medicare policy changes? Well, let's start with the policies that most directly affect women over 60, Social Security and Medicare. Social Security's financial challenge is that the trust fund is projected to be depleted by 2034. Yeah, if nothing changes, benefits would be cut by about 20% across the board. Yet here's what's important. Social Security has faced similar crises before, and Congress has always acted. The question isn't whether they'll fix it, but how. The potential Social Security changes include raising the full retirement age gradually, as they've already done a number of times, increasing the Social Security wage gap, currently at $176,100, slightly reducing benefits for higher earners, increasing payroll taxes, changing the cost of living adjustment formula. And this is going to affect women differently because we are more dependent upon Social Security. We live longer, so we receive benefits longer. We typically have lower lifetime earnings. We're more likely to take time off for caregiving or maybe child rearing. We're more likely to be single in retirement. Now let's talk about Medicare's ongoing changes. They are constantly evolving. Yes, they are. Drug price negotiations have reduced prescription costs, and that is a win. Medicare Advantage plans are becoming more prevalent, yet I throw out a note of caution. Read all the fine print. I don't want you having to prove insurability when you end up with something that is medically not favorable. And that you could get caught in with choosing a Medicare Advantage plan. No matter that the gym membership is free. Always, always, always read the deets. Telehealth coverage, it's expanded during COVID, and it remains very popular. Mental health parity requirements are strengthening. So what can we do? We can maximize our benefits under the current rules. Without waiting for perfect policy solutions, we can stay informed about proposed changes through reliable sources. I'm happy to be your information source. Plan for multiple scenarios. What if benefits are reduced? What if taxes increase? And consider our claiming strategy carefully. The current rules may be more generous than future ones. Now, how about tax law changes that impact women? You see, tax policy might seem boring to you, yet it directly affects how much money you keep, how much money stays in your pocket. The Tax Cuts and Jobs Act of 2017 have many provisions that otherwise expire this year in 2025. It could mean higher income tax rates for some retirees, reduced standard deductions, return of personal exemptions, changes to state and local tax deductions. The areas that also specifically impact women include the widow's tax penalty. When your spouse dies, you lose the married filing jointly status, yet you end up keeping the same expenses and so forth. So this could push you into higher tax brackets. Now, there's a qualifying widow tax filing status that if you have a minor child or that child which is in your care, you can claim that qualified widow status for 2 years, but you've got to read the fine print because you must check all the boxes. Let's talk about required minimum distribution rules. These recent changes allow you to delay RMDs, required minimum distributions, from your IRAs until age 73. Yet future changes could affect this too. How about estate tax exemptions? The current 12.9 million exemption per person is scheduled to be cut in half in 2026. This could affect more women who inherit large assets. Retirement account rules. The Secure Act changed the rule for inherited IRAs, requiring most beneficiaries to withdraw the funds within just 10 years instead of stretching those distributions over their lifetime. So what are some strategic tax planning ideas for women? Well, we could do a Roth conversion strategy where we consider converting portions of our traditional IRA funds into Roths while our tax rate might be lower. Remember, you don't have to do it all or nothing. You can parse it out, and it's wise to do that. We could tax loss harvest. This is offsetting gains with losses in order to reduce our current income tax bill. Charitable giving strategies. These qualified charitable distributions from IRAs can actually reduce our taxable income. That's really a dovetail strategy, super smart. Asset location. You want to place your tax inefficient investments in the tax advantaged accounts. Get out about 0.25% to your portfolio return every year. How about protecting our portfolio from this political volatility? See, markets hate uncertainty, and political seasons create plenty of uncertainty. So here's one way to protect your investments. The historical market performance, looking back at data since 1952, the markets have generally performed well under both political parties. Long-term trends matter more than short-term political cycles. So the biggest market moves often happen due to economic factors, not politics. Common political investment mistake. Mistake number one, making dramatic changes based upon the election outcome. I've seen investors move everything to cash because they feared a political candidate winning would only, lead to either disarray or, something negative. And they end up missing out on significant gains almost all the time. Mistake number two, try to time the market around political events. See, political outcomes are hard to predict, and market reactions are even harder to predict. Mistake number three, letting political emotions drive our investment decisions. Our investment strategy really should be based on our goals and our objectives and our particular timeline, not on any political preferences. So what are smart strategies in political uncertain times? Well, diversification. Don't put all your money in one sector that could be adversely affected by policy changes. Include both domestic and international investments. Consider assets that perform well during different political environments. Focus on companies, not politics. Invest in companies with strong fundamentals. Look for businesses that can adapt to changing regulations. Consider companies that provide essential services regardless of political climate. And we might use dollar cost averaging as investors. We continually, regularly invest systematically regardless of the political news. This helps smooth out the volatility over time, and it removes any emotion from investment timing decisions. You're just setting it up and letting it go every single period, monthly, every 2 weeks, whatever. How about policies affecting women's financial security? Let's look at those areas that specifically impact our financial well-being. Healthcare. Medicaid expansion affects long-term care options. Insurance regulations impact premium costs. Mental health parity laws affect coverage access, employment, and caregiving, and it's not positive for women. Family leave policies affect career earnings. Social Security credits for caregiving have been proposed but never enacted. Age discrimination protections in employment, financial services regulation. You see, there are fiduciary rules for financial advisors, and you'd be well advised to deal with a fiduciary financial advisor. There are predatory lending protections, and there are credit reporting accuracy requirements, and those end up being little protections for us. Let's talk about housing for a moment. We can look at reverse mortgage regulations and pay attention to them. You have to be 62, your house has to be free and clear to even consider a reverse mortgage, so you might be planning ahead. How about senior housing assistance programs and property tax relief for some seniors? Well, what can we women do? We can stay informed about policies affecting our specific situation. Yes, we can, and it's wise for us to do just that. We can engage with our elected representatives on issues that matter to us. There's a free app called 5 Calls, good for iPhones and Androids. Download it today. It makes being in touch with your elected representatives just the push of a couple click buttons. You can do it while you're driving, waiting for someone, and it is so easy and effective. I strongly recommend it. 5 calls. Plan for different scenarios in your financial strategy. Join organizations that advocate for women's financial interests. Yeah, there's power in numbers. And stay informed without being sucked in and feeling overwhelmed. And this is how we do it. We only look at reliable information sources. So for Social Security and Medicare, we're looking at official government websites, ssa.gov, medicare.gov. AARP advocacy updates? Yeah. Social Security Administration annual reports? Yeah. How about for tax information? IRS publications and updates from the IRS. Reputable tax planning websites. Your CPA or taxpayers updates. For investments, financial news sources, Wall Street Journal, Financial Times, your financial advisors, market updates, academic research on political and market correlations, information diet strategy, set boundaries. Check the political news once daily, if that, not consistently. Focus on facts. Look for policy details, not political spin. Seek multiple perspectives. Read sources across the political spectrum. I have 9 news sources on my phone, as well as Fox, and I read them and scan them every day. We want to verify our information, check our claims against the official sources, and focus on actionable information. What can we actually do with this knowledge? So here's our political financial awareness action plan. This week, review your Social Security statement for projected benefits. Check your investment portfolio for political concentration risk. Identify one reliable source for policy updates. Then this month, meet with your financial advisor about political scenario planning. Review your tax strategy with the changing tax laws in mind. And consider Roth IRA conversions if that may be appropriate. And this quarter, evaluate your Medicare coverage during the open enrollment period and update your estate planning documents if necessary. Reassess your overall financial strategy for changing policies. And remember, don't let political uncertainty paralyze your financial decisions. Focus on what we can control: our savings rate, our investment strategy, and overall financial planning. We want to plan for multiple scenarios rather than betting on one political outcome. Our financial security should not depend on any singular political party or policy. So our goal isn't to predict political outcomes. It's to build a financial strategy resilient enough to thrive regardless of who's in office. Now, next Monday, we're talking about estate planning and legacy building, ensuring your wishes are honored and your loved ones are protected. So subscribe to this channel, join our Facebook community, and share this video with any woman who wants to protect her wealth from political uncertainty. Until next week, remember, stay informed, stay diversified, and don't let politics derail your financial future. Next Monday, we're talking about estate planning and legacy building, ensuring your wishes are honored and your loved ones are protected. Subscribe to this channel, join our Facebook community, and share this video with any woman who wants to protect her wealth from political uncertainty. Until next week, remember, stay informed, stay diversified, and don't let politics derail your financial future.